Good evening, everybody. I'm Christine Fairchild. I'm coming to you from my dining room in Oxford. Still a bit of remote working, but delighted to be here this evening to welcome you all, and especially to welcome our featured speaker, Dr. Dambisa Moyo. We are so fortunate to have this woman. She is remarkable in her peripatetic nature. She is all over the place, and we are so grateful to her to make time for us here this evening. It is just a real treat. Just a little bit of housekeeping before we get started. One is that you note that the session is being recorded and will be made available after the event. So do tell your friends. Our recordings are available in our content library, and we're very happy to have people come back and revisit talks that they've already heard or hear them for the first time. You're all automatically muted, but that does not mean we don't want to hear from you. We're very keen to have your questions. And Dr. Moyo is really quite keen to hear from as many of you and make this as interactive a session as possible. So please do enter your questions into the chat function at the very bottom of your screen, and I will do my very best to field these questions to her. But now it's my pleasure to introduce Dr. Dambisa Moyo. She is a proud alumna of St. Antony's College, where she completed her DPhil in economics. She's a co-principal of Versaca Investments and serves on a number of global corporate boards, including 3M, Chevron, and Conde Nast. But most importantly, I think, she serves on the investment committee of the Oxford University Endowment, we're very grateful for that, because that makes our financial situation as strong as possible. So we're very grateful to her for that. Her areas of interest are in capital allocation, risk, and corporate sustainability. And while she is also zipping around the world, she's also been the author of 4 best-selling New York Times books. And her new book is How Boards Work and How They Can Work Better in a Chaotic World. And we are certainly in that chaotic world now. So I will turn things over to Dambisa and really encourage you to be adding your questions into the chat as we go along. Dambisa, over to you.
Christine, thank you so much. And hello, everybody. I'm delighted to be here. And, you know, Oxford to me is very much like the Hotel California, where you can check in, but you can't leave. All these years later, I'm delighted to keep coming back as a investment committee member for the endowment, but also I will be in Oxford tomorrow physically at the Blavatnik School in a joint event with Said Business School. But for today, I am absolutely thrilled to be able to engage with this audience and to talk to you about ultimately 5 things that I believe will dominate or really outline trends that will really characterize the post-COVID era, but also to talk to you more generally about sort of the way the world is right now and some of the challenges that we are facing and opportunities for the future. What I'd like to do, as Christine just mentioned, is I really don't want to spend all this time talking. This is an alumni audience, and so people, I would imagine, are much more sophisticated, much more engaged, and obviously have strong perspectives from their own disparate work and experiences. And so I hope to bring that in, and only will be trying to speak for maybe no more than sort of 10, 15 minutes. If you are shy and retiring, then I have plenty more to say, but I really hope that we can open it up and get some conversation going here both ways. But let me start off by giving a snapshot of where the global economy is today. But in order to do that, I think it's really important for us to look back just a couple of years ago. So I'm going to start off with 2019 to 2020, before the pandemic hit, so before March 2020. And I think it's really important to say 3 things. First of all, before COVID hit, we were already worried about economic growth. And I know some people on this call might be skeptical about the importance of growth. In fact, growth, I would argue, has had a very negative narrative, certainly since, I would say, for two decades, really, going back to 1999, 2000, after the battle in Seattle at the World Trade Organization meetings, we've had 2 decades of really a lot of skepticism about the pursuit for economic growth, a lot of concerns about capitalism, and with that, a lot of concerns about corporations and globalization. But suffice it to say, growth is important. We need it to drive improvements in livelihoods. We need it in order to really support and ensure that we have competitive elections in the form of democratic systems. There's wonderful work that's now quite dated, but it's been updated by Chevron, who basically has compelling data to show that at low levels of economic growth, low levels of per capita income, you actually have more volatility in the political system because you don't have a middle class to hold the government accountable. So perhaps unsurprisingly, you see a lot of volatility, coups, and real economic and political instability in a lot of poorer countries where they haven't yet reached a critical mass of a middle class. And we also need growth in order to help satiate those human needs, the Maslow hierarchy of needs, food, shelter, healthcare, education, etc., in order to provide opportunity for innovation. Again, no surprises that even in the depths of COVID, the countries that really delivered and short shrift for a vaccine are developed economies, because really you're living cheek by jowl, living in very dire conditions in poorer countries, and really the opportunity for innovation, R&D becomes much more challenged. So what's the problem? Growth has been going down. What does that mean? For economists in the room, I will try and pepper my conversations with numbers. We're talking about the need for 3% per year. We need economic growth to be 3% per year in order to double per capita incomes in one generation. A generation is about 25 years. If we want to actually put a dent in poverty, we need to be growing at 3%. And unfortunately, we are far from that. Developed economies like the UK, like Germany, have been posting growth at around 1.2, 1.4%. In fact, the UK, before COVID hit in 2019, had growth around 1.2 to 1.4. Germany, Q4, the fourth quarter of 2019, posted 0% growth. It's not just developed economies, developing economies, Brazil, Argentina, South Africa, Russia, many of the large emerging economies that have at least 50 million people have also struggled, certainly post the financial crisis, to generate growth above 3%. So we were already in this very dire situation before, as I said, COVID hit in earnest in March 2020. Another problem that we had is policy impotence. By that, I mean both monetary, so interest rates, and fiscal policy were already deep concerns before, again, 2020. We were worried about the amount of debt that governments had accrued. They were already trending and now are over 100% debt to GDP ratios, but also private sector households were already overloaded with debt. In the United States, about 14% of companies are what they call zombies. They have so much debt, they're in a situation where they're not even generating enough cash flows to cover the interest rate payments on debt. 14%, that's huge. And we know the numbers in the households, again, not just in places like the US and the UK, but really global concerns around debt in China. Also very recently, we've been seeing that with the recent real estate problems that they have there. On the monetary side, interest rates, historic lows, negative interest rates in Europe, in Japan, unprecedented. Really, economic textbooks don't even really think about negative rates, but that's where we found ourselves, and real questions about what happens next. So that was a real second concern. Third issue is enormous headwinds. We were dealing with climate change. We're dealing with demographic shifts. We're dealing with technological changes that actually could create a large population of a jobless class. We've been dealing with productivity declines. And again, for people who are interested in this, I made these arguments in 2018 in my book called Edge of Chaos, because it was real concern that this confluence of factors, climate, inequality, demographic shifts, etc., were actually going to further worsen the prospects for economic growth around the world. So if I haven't depressed you enough, I would like to just talk to you a little bit about where we are at this moment. So you would have seen perhaps yesterday, the day before yesterday, that China has just shown that it's slowing down in terms of its economic growth to around 4.9%. It is above the 3% number, but there are real concerns that that engine is slowing down. But more generally, if you look around the world, and in fact, more specifically, I would say look at the IMF forecast for 2022, 2023 and onwards, we start to see this trend of declining growth rates after the sort of rebound of 2021. So there is a real worry that actually we are not at all away from this big economic shock of COVID, but even before that, the trend line that was showing that we are facing these headwinds and policy response was quite impotent, and really structural growth is continuing on a downward trajectory, really putting in play a lot of challenges around living standards and other aspects that I've mentioned already. But before I delve into what this means in terms of sort of portending the future, thinking about what the 5 trends are going to be, I'd like to just take us back in history to see, a little bit further back in history, just to get a sense for people to understand why it is I've landed on the 5 trends that I've landed on. And so let me take you back to the 1870s, which was the period called the Gilded Age in the United States, from 1870 to 1900. That period of 30 years has many of the hallmarks of the global economic environment that we have seen from 1950 to 2008. We've seen economic growth be incredibly high in both of these periods. We saw a lot of globalization. In fact, for these 2 periods, in places like the United States, immigration was at sort of around 15% of Americans were actually foreign born. There was a dip, which I'll talk about in more detail later, but the dip during the progressive period, 1930s and 40s, when there was that real economic malaise, the percentage of foreign born Americans dipped down to around 6%. But beyond those periods, the Gilded Age and really this 1950 to 2008 period, very similar, lots of trade, lots of movement of capital, really a period of globalization and economic growth. There are other things that are also important in these 2 phases. We saw massive government, so government became incredibly important, I beg your pardon, it was massive corporations, so Standard Oil, Rockefeller, the development of the railway barons in the Gilded Age, but obviously in more recent times, the size of corporations has become incredibly important, we know over the last several decades, certainly in the West. And then contrary to what I was saying a moment ago, we also saw that government was relatively weak. So we saw small government. In fact, if you think about the relative size of government in these 2 periods, very similar. Government was really quite small. All the power, economic power as an arbiter of capital and labor, that was really driven by corporations. So what happened? In 1900, you enter into this new century, the 20th century, and 3 things happened almost sequentially. You had a World War I from 1914 to 1918. You then had a pandemic, 1918 to 1920, in which, when that period, those 2 years, we actually saw, by some estimates, over 50 million, some estimates as many as 100 million people die. And then it culminated in an economic crash in 1929, where we saw a collapse of the stock markets. And this is an important statistic, again, I think worth thinking about. In 1929, before the collapse, the stock market, Dow Jones Industrials, peaked at 381 points. Just as a way of a marker, the next time the Dow Jones recovered to 381 points was 25 years later. It was in 1954. So you actually see from 1929 to the 1950s, a period of economic malaise where all the things that I mentioned to you, high growth, lots of globalization, big corporations, small government, all essentially becomes reversed. In fact, what you see from 1929, 1930 until 1954 is actually a slowdown in economic growth. It's a period of high unemployment, high economic challenges, and we start to see the breakup, a very active breakup, even though the Sherman Act had come into play in 1900, which broke up the large corporations. We start to see much more aggressive action from government and really breakdown of globalization. I mentioned the immigration statistic to you, but in addition to that, we start to see Smoot-Hawley in 1930, which is in the US, the period or the policies that actually put tariffs as well as quotas that barred, thousands, I think some estimates 30,000 of goods and services into the United States. So complete reversal. And as a part of that, government becomes incredibly big. You start to see the growth of the welfare state, the setup of the Social Security, FDIC, et cetera, is really built around this progressive period in the United States. So some of you might be saying, well, what does this have to do with where we are today? And I would argue that we are actually about to enter a very similar phase to that progressive period. And this is where the 5 points really come in. I do believe we're going to see bigger government. In fact, Angela Merkel, now former Chancellor of Germany, has been saying for many years that she's been deeply worried about the size of government. So this is one thing that is definitely changing. Size of government in terms of debts and deficits has become a much bigger issue, not just because of COVID, but again, it was already in the trend line over the last couple of decades. Just to give you a specific statistic here, Angela Merkel has talked about 725-50, the fact that Europe is 7% of the world's population, represents 25% of world GDP, but 50% of world welfare payments are just to Europe, half of the world's welfare payments. If you add the US and Europe together, you're talking about 12% of the world's population, just under 50% of GDP contribution. But together, these two regions, just 12% of the world, represent nearly 90% of world welfare payments. But 90% of the world's population lives in the emerging markets. And so she's talked extensively about this imbalance, that you have 90% of the population of the world living in some of the most poor and destitute regions of the world, and yet the welfare payments, 90%, almost 90% of them are actually skewed to the Western societies. So that's point one, bigger government. Point two, government becoming much more active, much more sort of aggressive in terms of taxation, in terms of regulation. And we're seeing that already, partly because they're trying to raise money to fund a lot of programs that need to be implemented in reaction to COVID, but to other structural changes, such as climate, such as inequality, et cetera. But also we're seeing government get bigger because corporations have got bigger. In virtually every sector. So I'm talking about banking, pharmaceuticals, airlines, energy companies, et cetera, they're now oligopolies. And so quite contrary to the Sherman Act and what the plans were for more competition around the economy, very naturally through acquisitions and through growth and mergers and acquisitions over time, we've actually seen that we've ended up with oligopolies all over again. So the expectation is that we will see many more, I believe, regulatory and tax sort of imposition from government. We've seen it already with the global tax agenda, but also I think with the regulatory conversations that we hear about breaking up tech, but others, I think we'll see a lot more of that in many different sectors in the years to come. A third thing that is very key, as government's getting bigger, private sector's getting smaller. One of the big statistics here that I think is really important is to think that over the last 10 to 15 years, the percentage or the number, excuse me, not the percentage, the number of companies that trade on public exchanges has gone down by 50%. In the US and Australia and elsewhere, a little less so in the UK, but in the US, for example, about 15 years ago, we had 7,000 companies that were publicly traded. it's now around 3,500. And really what has happened is a lot of capital allocation, building of businesses is now moved into the private sector. By that, I mean private equity and offline, so much less of publicly traded companies. There are enormous consequences for that, and we'll come back to, I'd love to talk about that as well. As my vantage point from the boardroom is that there's a huge risk that issues around diversity, issues around inequality, et cetera, climate, will no longer be easily regulated for privately held assets and privately held companies. And we've seen that now the private equity market in particular is now trillions of dollars as they continue to assume many of these corporations and companies are delisting. But there are other things. That's a third point. A fourth point, I think that we're going to see much more in terms of corporations choosing to move their innovation back into their home states. So this is part of the fifth point in a minute, but we're going to see much more deglobalization as companies become much more siloed in how they operate. And by that, I mean that their decisions will no longer be sort of, oh, let's borrow money relatively cheaply in London and New York and invest at higher yielding with higher risk-adjusted returns in Brazil or South Africa or Taiwan. Those worlds are really now under pressure and under threat. So companies themselves, as they think about the allocation decisions, are becoming much more siloed, much more balkanized in the world as we continue to face some of the geopolitical risks. Which leads me to the fifth point. I think another trend that's going to dominate, which is again something that was already showing its head in 2019, is greater deglobalization. This is in the areas of capital movement. It's in the areas of immigration. It's in the areas of global cooperation, as well as in the areas of development of technology and how we oversee technology. In each of these areas, the world is becoming much more siloed, and it's particularly problematic because many of the problems that the world is facing are actually global public goods, like climate change, like inequality in terms of the pandemic. These are global inequalities, global challenges that require global solutions, but we are in a world now where we see countries pitting themselves against each other, not just West versus rest or US, China, but more worrying, to my mind, is that even within Western countries, there's disagreement. There's disagreement on how to deal with climate change. Europe, for example, much more rules-based. The UK and the US, much more principles-based. Disagreement on how to fight the pandemic, disagreement on how to distribute the pandemic, again, not US, China, which might be seen as quite far apart, but also within Western countries themselves. So what does this mean for opportunities? I spend a lot of my time investing. I'm also on boards. We can't shrink to grow. We need to invest. We cannot solve these problems by risk mitigating and just wishing them away by just focusing on downside. And so I do think that there are a bunch of trends that when I close my eyes and I put a cold towel over my head, I say to myself, what do I know is true today that will be true 50 years from now? And I think there are three trends, and I'll just mention them really quickly in terms of, these are now the opportunities for growth and investment. For sure, China is going to be part of that equation, like it or not. China was the largest economy in the world in the 1600s, according to Angus Madison data. They made a bunch of policy mistakes. It cost them centuries. They are now back. They're doggedly focused on growing that economy. So I think China is going to be something that we will have to contend with in terms of our engagement. We've seen what they're doing in many different areas, technology. In fact, I was just in China before the pandemic hit, and they were already at that time ahead of Western countries in terms of quantum computing, in terms of some aspects of AI like face recognition, et cetera. So real consequences, but China, to my mind, is not going away. A second trend that's not going away is technology. And I think here we can be optimistic because I don't think it's just be technology in terms of what does it mean for consumerism or networks such as Facebook. It's also going to be, what does this technology mean for really the delivery of quality public goods, healthcare, education, et cetera. So I'm quite optimistic about what that might look like, but that for sure technology is going to continue to really astound and really provide, I think, new levels of opportunities in public goods as well as private. And then the final thing that I believe is not going away is the energy transition. We know today we're consuming 100 million barrels of oil every single day, 100 million. And this is unsustainable given the concerns around emissions. We have about 50 billion tons of emissions coming out, but we cannot ignore the fact that we also have 1.5 billion people around the world with no access to energy in a sustainable, cost-effective, and clean way. And so we can't leave our efforts should not be leaving people behind in greater poverty, but it's for sure one of the big risks in terms of climate change, but also real opportunities. And I was delighted yesterday to be the master of ceremonies for the Global Investment Summit, which was focused on green in London. And we had lots of people attend, from the Prime Minister to Bill Gates, Larry Fink, from BlackRock, many investors who are actually putting money to work. And I'd be happy to share some of the takeaways from that. But I've said a lot. It's now 7:26 on my screen. So why don't I stop here and maybe open it up to conversation and some questions, if that's okay. Back to you, Christine.
Excellent, Dambisa. Thank you so much. And it's been so interesting to watch, well, to listen to you, but also be watching the chat, because what you've done effectively is sparked a lot of conversation in the chat itself with each other, which is great. It's sort of the thing we're missing, is that sort of networking and trading of ideas amongst ourselves. So thank you for that. But that said, I'm going to start throwing some questions at you. Let's see, I'm not sure if I can turn that into a question. So that's the other thing, is you put questions in. I would really love it if they could be in the form of a question. That would be a huge help. So here's one from Peter Newman. Looking to the end of this century, should economic policy focus much more heavily in seeking to reduce the demands on planetary resources made by humans, not on sustaining what we measure as economic growth? That may mean less consumption globally and not more output. Is that something?
So if I think maybe, hopefully I'm understanding you correctly, but I think what the question is really getting at is this tension between climate versus growth. Climate efforts to, and I hope that's my understanding. I see another, I don't know if it's the same gentleman, but it says on energy, hopefully, it might be a different question, but that's my understanding. And I think it's a very, very good question, because because of the urgency of the climate situation, there are real efforts, and people have been quite aggressive. Some people think we should defund energy companies, we should shut down many different aspects, but I worry a lot that this type of an aggressive stance around climate actually could lead us further away from a low carbon net zero environment. And I think there are a number of things that could happen instead. It could get more expensive to get energy. We're already seeing some of that in the United States. In some places, it's now $5 at the pump. It's getting expensive. What does that mean for society, for people having to actually live? There are real concerns that there are trade-offs that governments have to take. How willing are we? How much are we willing to give up? I remember the former chancellor of the Exchequer in the UK, Philip Hammond, said, look, it could cost $2 trillion, or at that time, 2 trillion pounds, excuse me, to actually put a dent in climate. But that means we're not going to be able to put it into education. And people were really upset about that. But the truth is something has to give. And I think from a policy perspective, the idea is to thread the needle of a very challenging situation. If you go too aggressively, I mentioned there's 1.5 billion, about 15% of the world's population already today is struggling under lack of energy. Are we okay with disorderly migration, which could be a consequence of us not being able to support economically or geopolitically geopolitically these environments, and which will cause a natural, a normal movement of people as they seek better fortunes, better opportunities. So I think that we would hope, and I think when you speak to policymakers, they would say there isn't a trade-off. In fact, green economy is really a good thing. It will create opportunities. It will expand the pie, because we don't want to lose sight of that. It will create opportunities to create new jobs and really be able to address the climate concerns that we have. But as I said, I think at the extremes, the conversation should not be either or. It should be, how do we do these together? Risk mitigation in of itself. So thinking about the glass being half empty, things like emissions, things like scope 1, 2, and 3, critical. But they are not going to get us to the situation where we have investment across the stack of energy in geothermal, in biofuels, solar, wind, nuclear, etc. We need that investment at scale. The IEA thinks that we need $5 trillion per year in order to reach 2050 goals, and right now we're only at 1.9. So there shouldn't be a trade-off, and I think most people, the rooms I serve in, corporate boards, government boards, etc., are keenly trying to address this needle threading in a way that brings everybody along. But we're definitely under pressure from people who don't seem to understand the nuance and who are quite aggressively pursuing one or the other.
Excellent. Thank you very much. Very comprehensive. So here's a new question. Do CBDCs, central bank digital currencies, used as a means of addressing poverty by their potential for targeting, and without the usual concerns associated with printing paper money, do they offer a way of circumventing low growth?
I'm not sure exactly what the mechanism that the questioner is asking about, but let's just talk a little bit about what's happening now. I just noticed today that Bitcoin is trading at $65,000, and we're thinking about, and I didn't get into it and I'm glad that there's an opportunity to mention here the risk of inflation, because that's what people are really worried about. They're worried about fiat currencies because of everything that's happened, the stimulus. I mean, the number today I heard was $17 trillion worth of new stimulus because of the pandemic and building off of the financial crisis. We're worried about, is there going to be inflation? Is it going to be temporary? Is it going to be permanent? And I think that concern, in my generation, we used to run into gold. Now there's a question about, should we be running into more blockchain innovations, such as cryptocurrencies, not just cryptocurrencies in what I'd call the private sector, but also government-led cryptocurrencies. My personal sense is that frankly, I think two things. One, crypto might be a little bit ahead of itself. And when I sort of dig down and I talk to people who are investing in the area, certainly more than I am, they take the view that there's not enough customer adoption quite yet for us to be worried. So in other words, a lot of the people who are trading in crypto, it's still a very narrow number. So it hasn't yet reached critical mass that you could say it's been adopted quite widely. Of course, there are countries that have adopted it. Ecuador, I believe, is one of them. But the point just being that we're not quite there yet. And then the question around inflation, personally, I think it's a very tall order to expect governments who really wield their power using fiat currencies. This is how they fund public goods like infrastructure, education, and healthcare. It's how they see control globally in terms of military, in terms of global public goods like protecting the sea lanes, etc. It's how they'll fund the issues around inequality, social mobility, climate change. The notion that they'll give up that control, to my mind, I think is a hard sell. So I do think that even if it's harder for governments to step out and say we're banning it, as you've seen in China, for example, I do think that even in the government crypto space, I still think that they would still have some leverage and opportunity to increase the supply or to do things that would actually alter the supply, and therefore will retain the power that's associated with the sort of fiat or power concentrated with government. So I think that was what the question was trying to get at. I don't really believe in the sort of crypto aspects as being something that is quite where it needs to be to give fiat currencies a run for its money.
All right. Dambisa, here's a question about trade. Many developed countries, the capitalist countries, are suffering more than ever from globalization, because it appears they aren't able to compete against some of the emerging countries like Brazil or China. What does that mean? Do we need to reinvent the paradigm of international trade, which will mean to some extent potentially the end of capitalism?
Well, actually, I think it's quite the contrary on the last point. So if you go back to canonical models of economics, the capitalism and really globalization, which is where trade falls in, was really supposed to be highly competitive. And the idea of globalization in particular was that you were going to end up with the best people doing their particular thing that they were equipped to do. So if you were best at creating cars, you would create cars and nobody else would. And if you were good at growing bananas, then you would grow bananas. And that's how you'd get global trade. We know that that has never happened, and that governments provide subsidies and they have tax breaks and protections. And they always have in Western countries in particular to protect their markets, their farmers, and to protect their industries. And so part of the aspects of globalization failing and really having a bad name, I would argue, is actually got less to do with the idea not working and more to do with the implementation not being the way it's supposed to be from the textbooks. We have massive $1 trillion subsidy programs in Europe under the CAP, Common Agriculture Policy, similar food subsidy programs in the United States to protect American farmers. But that really takes away from the whole notion that we should allow everybody to do what they need to do. 100 million of farmers in Africa, as an example, in places like Brazil, are not able to grow the produce that they really ought to be growing. Partly they're not able to feed themselves, but also not to export because they have so many blocks in terms of, as I mentioned earlier, a lot of the rules around what is considered acceptable, what's the curvature of a banana, for example, in order to export it into the European Union. So, what does this mean? It means that, I wear my heart on my sleeve. I wish we could live in a much more competitive world, but I think in a realistic competitive election environment where people are pandering for votes, they're looking for the electoral win, they will always seek to gain favor, and therefore will continue to use fiat currencies that we were talking about a moment ago to and policy more generally to incentivize people to give those votes through subsidies and through programs and protectionism of different markets, even if they are not competitive on a global basis. The other point, which I'll just make, which I think is an interesting one, which Jack Ma made, which is that even when governments have benefited from economic success, and the West did earn a lot of money, trillions of dollars from globalization, they still made bad policy choices. So in the US, again, as an example, but this is true for across Europe, instead of using the windfall to fund and reinvest in infrastructure or to reinvest in reskilling the workforce to prepare them for the digital age, what ended up happening is that they fought these enormous wars in Afghanistan and Iraq. And so what you ended up with now, obviously, essentially 2 lost wars, and a lot of people in their countries quite rightly disgruntled because of lower wages, declining wages over time, really dilapidated infrastructure. We know in the US, according to the American Civil Engineers organization, they rank this infrastructure in the US and it's graded D+. These are ports, these are railways and roads. It set the US back. This is part of the reason that they're not as competitive as they ought to be in new technologies, new infrastructure, such as quantum computing, semiconductors, where they had 39% market share, they're now down to 12%, unlikely to be able to recover, at least not that easily. So I think there are 2 things here. One is that public policy leans into politics. So we are trying to pander and we do things that dislocate the markets and are not really pure globalization, pure capitalism. But also, as I said, when we do win, the policy decisions on the back of that have been wrong and have been actually wrong-headed and have tended to undermine the societies across the world.
Thank you. Here is the question from Joe Gullner. Is it possible to look at the pandemic as the kick or the spark that we need to innovate? Is this going to be our silver lining in some fashion?
I like that question a lot, because I do think, they say you should never let a good crisis or go to waste. And I think that in the boardrooms in which I serve, I think there are a lot of opportunities that people are now saying, well, wait a second, what have we learned from this that actually could be enhancing for people's lives and livelihoods, but also for how we actually do business. And it's also true for government and government policy. What have we learned that we can actually implement? And the innovation is a big piece of that. We were able, through mRNA innovation, which I had never heard of before, I have to confess, to now really start to solve not just for a pandemic, which we've done by and large, but also to start thinking about really combating other diseases, other ailments. I know they're doing some trials now in malaria, et cetera, possibly cancers. And I think that that is a big innovation that has come through. I tend to be a glass half full person. I try to be optimistic. I think that I have to remind myself, even in sometimes when I think, oh my God, we've got so many challenges, that actually, boards of and actually business leaders and public policy leaders of different generations that have gone before us had potentially even bigger challenges, meaning that they had to deal with wars. I mean, some of these companies and governments were really building infrastructure. The NHS was built right in the middle of 1942, and bombs are flying. And so I think that that's an important thing we shouldn't lose sight of, that there is opportunity for innovation. And I think we desperately need it in things like climate change. I always say there are 8 billion of us on the planet. If somebody knew how to create sustainable, cost-effective, clean energy today, we would have an answer. The reason we don't have an answer is because nobody has the answer. These are complex problems that require multi-dimensional, multi-generational thinking. And I worry a lot that there's not a lot of innovation coming up. But I think the pandemic, really what happened with the development of the vaccine in particular, has shown, wait a second, you can actually do something in the short shrift time, and technology is giving us a lot of opportunity to consider a lot of other problems in that way. So I'm optimistic. I will say just one of the takeaways from yesterday's conference, which I thought was interesting, is a lot of people felt, you know what, we're still very much in the R phase, and we have not yet gone into the D phase. A lot of money likes to come into the D phase, which is why government is really necessary to help to close that, what people are calling the green premium, the costs. If you decide, I don't want to use fossil fuels, I want to go and get a electric vehicle, or I want to use I don't want to use a fuel burning heat, then you have to pay more. But trying to close that gap is going to require a lot of R, a lot more innovation, a lot more research into this. And I think that again, is something that the pandemic is teaching us in terms of technology and our ability to use technology to solve problems.
And I wonder if it's also giving us universities an opportunity to step into that space, to be much more present in that space of innovation. And, you look at universities around the world who have created these incubators and the number of spin outs from universities, it's just remarkable. And to be these hotbeds of research to help to push that along, it's sort of the golden age of the university, it feels to me. Especially
Oxford. I mean, of all the universities everywhere in the world, I mean, everybody knows Oxford now because we were right there. And this is, I'm thrilled as an endowment, an Oxford alumni, but also as an endowment person to say, actually, what we're doing is good. It's important work. And just look at what this means for not just the reputation of the institution, but for the world. We showed up and we were able to deliver something very tangible. I mean, I went to Harvard. I don't hear Harvard's name in these discussions. There are many other universities that compete with Oxford. None of them were really at the tip of the spear on this. And I think we should really revel in that. And, I know, you can love politicians or not, but even the prime minister was joyfully gleeful yesterday that even he had gone to Oxford. He said, that's my university. They came up with the vaccine. So I think that there's something to be proud of, that we are associated with an institution that showed up to the world when challenges hit.
Absolutely. Well, now that we've patted ourselves on the collective back, here is a question from Alan Mumby. Can you give an opinion on the use of private equity in economic growth and in equitable income distribution?
Yeah, so here's the thing. I am very pro markets in terms of what they're able to do. I think that we always are trying to figure out how to deploy capital in order to generate returns. It used to be just financial returns, but now actually in these boardrooms, people are very interested in societal returns. And that's partly because of the Business Roundtable in 2019. But I think more generally, there's a clear understanding that we do have to generate returns above the cost of capital, but we have to recognize, and by the way, we need to do that. Otherwise, we're not really running organizations that can survive, come hell or high water, and they won't be able to survive longer term. But also, it's really important in order to reinvest, using that capital to reinvest and to create some of the R as well as the D that we touched on a moment ago. So I'm very optimistic about private capital. I think private capital does use its genius to allocate capital and allocate resources better than I would argue that sometimes other institutions might do. And that's kind of their job, is to sit there and think about what bets actually could pay off at scale. It's not to say that it's perfect, but I think there's a real risk for companies if they don't do that on a sustained basis, they'll go out of business. And so I'm actually very bullish about the role of private equity in particular. This is not to say that they don't need regulation or that they can't be better partners. If anything, my great worry right now is that the world is very fractured, very segmented in how we deal with a lot of these public policy negative externality problems. I'll give you a specific example. I'm fortunate enough to have been born and raised in Africa, but to be on the Oxford University Endowment. I also serve on the board of a large energy company, one of the biggest energy companies in the world. And in these three rooms, there are completely different conversations happening. I speak to governments and they're very worried about emissions, as they should be. I speak to the endowment. They are under pressure from the university community. They want to defund energy, but then at the same time, they want more diversity in the student body. But you're not going to get more Africans and Asians and South Americans at Oxford if they don't get an education. It's as simple as that. They need a basic education, and we won't be able to create diversity if we don't do that. And then I'm in the boardroom of an energy company. I know what they're doing. They're putting to money work, not just in fossil fuels. They are trying everything. They are at the tip of the spear, trying out hydrogen, nuclear Gen 4, solar, wind. They can tell you, this is why solar doesn't work. This is why the returns to wind are more than geothermal. We need that information. And yet these three groups are having separate conversations. There's no one place where we all meet and say, okay, let's try and figure this out together. And I worry a lot about that, because I don't want a situation where private equity is trying to solve these problems on their own without consideration for the issues around disorderly migration, which are more policy concerns. I also don't want us at the Oxford University Endowment to have to be forced to make economic decisions that actually in the short term might be appealing. Yes, people might say, let's defund these companies, but in the longer term, you're creating inflation. You're making people's lives worse off, because those energy companies have to find capital somewhere else. It's going to be more expensive for them to develop some of these things. I actually have an article in the Financial Times today looking at exactly some of these issues. So I'm very pro-capital, because I do think that capital plays an important role. I think the private equity aspect of it is also very important in terms of allocating resources, but I think that we do need to have much more of a common discussion. We can't have Greta Thunberg over here at COP26 and then the Global Investment Summit happening over here with the innovators and capital somewhere else. I mean, that is not going to solve problems as far as I'm concerned over the longer term. So we need to bring everyone into the room.
Dambisa, thank you. So this is a question about polarization, and we know we are living in a very polarized time, a politically polarized time. Do you feel that polarization is indeed a symptom of the trends that you laid out, or do you think it's just is it another trend to be added to the 5 that you described? Is it a contributor, or is it an output of the trends that you described?
I like this question because I think very often, and I alluded to this a moment ago, it's very easy for us to sort of think, oh gosh, we're living in these times that are so unique so unprecedented. But actually, I spent a lot of my lockdown reading history and realizing, actually, who are we kidding? We actually, if we bothered to read history, we'd find that the patterns do repeat themselves. So if you look back on the sweep of history, we've had the Salem witch trials, we've had McCarthyism. These are periods where certain views, political views, have dominated. We've had populism before. We know that it could lead to hyperinflation. We know what consequences, what Nazi Germany emerged from some of the things that people are worried about today. So I worry about these things. I don't really think about whether they're the cause and effect. I'm more interested in what happens next and how do we actually avert war, for example, because very often what I described to you did end up in 2 world wars after the Gilded Age. I also am very interested in how do we avert a reduction in living standards. So, yes, I think that people's frustrations do lead into globalization doesn't work, government's not working, corporations are being seen as greedy for shorthand, and all of this leads into the big risk that you end up with Brexit, you end up with much more populist tones, which are fragmenting the world and creating a world that's much more difficult to address these problems. So those are the things that I worry about. Even now, listening to some of the discussion about what might happen with COP26. I hope the Chinese and the Russians show up, and South Africans. They are really important for the future of the world, whether we like it or not. And the stories that they might not come. And that's just not a world that I think is going to get to the answers that we need.
Rebecca Collicott asks, given the similarities, do you predict another crash like we saw back in the 1930s?
So it's interesting, as an investor, I worry about this all the time. I think that we are much more, so a couple of things. I think one, there are a lot of controls that have been put into place. So banking controls, I think maybe because of the trial of the financial crisis, I know that the balance sheets of the banks are much more rigid, much more protected. So the systemic risk that we saw in the 1930s, which spread into real economy, and you could argue that's what happened to some extent in 2008. I think we've done a lot of work to sort of block those fire exits, if you will. If I can use that analogy, I don't know if that actually makes sense, but essentially the fire I don't think is going to spread as aggressively, but that doesn't mean that we won't have inflation. I think that we're already seeing it. The U.S. print for CPI is 5.4. I'm at this point inclined to believe that that technology could bail us out, because the cost curve for things like transportation, food production, telecommunications is continuing to go down. So that gives me a little bit of optimism to think that actually we might not have inflation. There'll be a counter effect from it. But at the same time, I worry about certain pockets of inflation. Education is more expensive, healthcare is more expensive, which is why I said in my remarks, to the extent that technology works, I think I'm hoping we'll see a lot more improvements in what it can do for prices for public goods like education and healthcare. We haven't yet seen that. And that's where I worry, because that really affects livelihoods and people, the choices people make about going onto the streets and more populist policies. But I think on the whole, my short answer is that I think that we have enough controls to avert a full-fledged meltdown, as I mentioned, that 25-year malaise. But I do think we are in a period of slow growth and lower returns, certainly for the next decade would be my sense.
And here's a question about demographics. Demographics is a huge elephant in the room. China and Europe are in historic lows and are way below the levels of sustainability. How do we square the circle?
Yeah, just to put it into perspective, because again, in my book, Edge of Chaos, I talk a lot about this. And as I was writing that book, I talked about climate, and I talked about technology, I talked about inequality, I talked about demographics, and of all of the things that I was really shocked by, it was about demographics. And just to put it in perspective, it took about 100 years to go from 1 billion people to 2 billion people. It's taken us about 50 years to go from 3 billion people in the 1960s to nearly 8 billion people today. We're going to be according to the United Nations, will be 11 billion people on the planet 2100. India is adding 1 million people a month to the population, 1 million a month. We're adding 60 million a year, which is the size of the UK, or somewhere between UK and Germany. I'm worried a lot about demographics. I think that especially if demographics are outpacing economic growth, in particular, and opportunities for people, young people in particular, I think that that's a worrisome thing to think about. I was recently on a call with someone who made a very interesting point, which feeds back to the question earlier about this trade-off between growth and climate. And the person said, a lot of the countries, they're really, really two big emitters, the US and China. We all know this. I mean, they are really more than half of the emissions come from these two countries. If they, just 80-20 rule, if those two agreed and did something about it, we wouldn't be perfect, but it would be enormously, enormously impact our trajectory. A country like Gabon, which is what this person said. So this country's it's got very few emissions. It's got real problems around economic growth. It's got no jobs for young people. That is a problem. The demographics are a problem. And so I worry a lot about demographics. What can we do? I think some of the levers that have been used in the past really are an affront to choice. So we've seen, castration in India. We've seen the one-child policy in China, which has really affected their future demographics. But certainly, I think more education is one thing that we've seen over time actually helps to reduce the number of children that are born. I mean, at a time when people are living longer, I was shocked a number of years ago, and again, this is in my book, which I was really surprised to hear that the global average life expectancy is now 71. When I was growing up in Zambia, it was 37. So globally, it's amazing that we've made so much progress, but there are consequences for demand of resources, et cetera, that we need to think about in terms of demographics. And some of the levers to change are not that exciting. May I just recommend one book for people, if you want further information on this conversation. There's a book that's called Poor Economics that was actually published by now Nobel laureates Abhijit Banerjee and Esther Duflo. And it's a small book, but it's really powerful because they talk about why a lot of the problems around population growth are based off of flawed assumptions. When people think about population growth in a place like Africa or India, they think it's because these people don't have access to contraception. So they go with a big policy to dump contraception in these countries. And actually, people understand that they have to have more children because infant mortality numbers are not great, or they need their children to help them in sustaining. So, for subsistence living, we need workforce. Or another reason is we need the population to help us when we're pensioners and we're older. They don't have the structured pensions I mentioned earlier in the welfare state that you have in the West. So those are real reasons, and policy sometimes gets it wrong. They think it's one thing when actually people are thinking about different things. So that book, I think if you're really interested in how to address the population boom and thinking about these issues, you might want to grab that book. It's really good.
Excellent. I have another question. It might be your last question, depending on how long and interesting an answer you've got. And this is coming from Cindy Gallup, and Cindy is in New York, and she's a dedicated Somervillian alumna. Her question is quite an interesting spin. What role does the female lens play in all of what you're discussing, given how underrepresented women are in everything we've talked about today?
It's at the center. And it's actually astonishing to me how hard we've had to fight all these years. In fact, I'm reading a wonderful book now about Nancy Astor, who many of you will know was the first woman elected to be a member of parliament in the UK. It's honestly, what she did was phenomenal. And she laments how even as an MP, she was still not able to, they've got a cabinet position, she wasn't really able to affect policy. We need women in all of the boardrooms. And by that, I mean in public policy, we need them in business, we need them in civil society at the highest levels, absolutely. And this is not nobody should be doing us any favors. Nobody's asking for us to do favors. We are doing the work, and our perspectives are absolutely critical. This doesn't mean that we don't need guys, or that we should be going against men. That's quite not what I'm saying. What I'm saying is that the world has been missing out because they have totally discarded or appreciated the role of women, the perspective of women, that nuance that has been really, I think, would have saved us a lot. And I think it's, you've seen the statistics, the best countries that in terms of response to COVID, female leadership, the business, looking at the companies that survived the financial crisis better than others, female leadership. We are seeing politically what Angela Merkel did, again, really driven by female leadership. So there's something there for sure. And I really want to urge women on the call that, the world is changing. I think we are in a world that people are much more open-minded to it. And so the competition is going to be much harder. But I think it's fantastic that there's finally a recognition that women play an important role in driving the world going forward.
That is brilliant. Thank you.
Nowhere near enough, by the way. Nowhere near enough.
Excellent. All right. Well, we're going to end on an optimistic note, I think, here today. Thank you so much for your time and your attention and your dedication to the subject. We really so appreciate having you with us. And those of you who would like to hear more from Dambisa, she is speaking tomorrow at 5:15 British summer time. Through the Blavatnik School of Government. She's speaking on corporate boards and the post-COVID-19 recovery, and she'll be in conversation with Colin Mayer. So you're very welcome to join that. It's a public virtual lecture, and you're very welcome to come. But again, thank you so much on behalf of all of us, Dambisa, for your time, and good luck with you. Thank you very much.
Please try and join tomorrow. We'll talk about corporations and their role and where they need to improve. But it's been a pleasure being here. Christine, thank you. And everyone, I appreciate your comments and questions. Thank you.
Brilliant. Thanks so much.
Bye.
Bye-bye.